Hello everyone. In this quick video, I just want to talk about using a price ladder a little bit because it's going to be something new for a lot of traders, and to really make the most of the Digitex ladder, which I think is going to be pretty unique, you're going to want to use certain strategies, and we really want to do something that is going to allow us to take advantage of the zero fee model as much as possible. So I just want to talk about what I think that's going to look like, and some things that you can do when you're trading with the price ladder that you don't really do with price charts. So I'm assuming that this is basically going to be what the layout of the ladder is on the Digitex program. I think it was pretty similar to the original demo that they did. So what you basically have here is just like a volume profile on the side showing just a number of contracts that are traded at each price level, which is going to be really useful for sure. You're definitely going to want to be having a clear display of the volume. And then here, obviously, this is the price in the middle. This is the current trading price, and then these are just going to be basically how many contracts are waiting to buy at this level here. So 65.55, 65.50. So these are people waiting to buy at these prices, or saying they're waiting to buy at these prices anyway. And then the same in the on the other side for the sell. And then basically what's going to happen is as the price goes up and down, if people come in on the if buyers come in strongly and they want to buy 1865 contracts at this price, then that is gonna clear, and then the next price will go up here, and then I'll have to clear these 90, and if they do, it'll keep going up and up. And then the same on the other side. If people come in with market sell orders and hit these 50, it's going to go down, etc., etc. And that's basically how it's going to work. So that is kind of what happens with a price ladder. Now, I just want to show you the price ladder that I use currently, just for like more traditional futures trading. Not in the crypto space. So this is basically this is a couple of different tools. This is Jigsaw. This thing on the right, this ladder. This is, if you're outside of crypto and trading more traditional futures, whether it's like commodities or interest rates or indices or whatever, Jigsaw I think is probably the best price ladder tool out there at the moment. They have a lot of functionality. It's really, really great, and Digitex is going to be having a few things that they have, at least enough to be able to use these trading strategies well. So this is Jigsaw. The chart, this is just MetaTrader. This is just MT4 or MT5, one of them. I literally only use this to like display a price chart. I don't trade from it. I don't use any indicators on it, just really to see the big picture. And in terms of like short-term trading, this is basically like pretty useless, other than just getting a snapshot of what's going on. So I just want to be able to see like the last session or the last few hours or something. And really that's it, just so I kind of know where we are in the bigger picture. But all of the trading and things like that and the analysis is going on over here. So this is Jigsaw. This is MetaTrader. And there is one indicator which I sometimes look at, and that's going to be this blue line down here, which is called cumulative delta. And it's not really like any of the other indicators, which is why I like it. It's not like a MACD or an RSI or anything like that. Really, it's just showing the difference in the market buy and market sell orders. And that just kind of helps to set bias and get an idea of like the bigger picture in terms of what the market orders are doing. And it's just going to make me a little bit more keen to either go long or short based on what's happening with this cumulative delta. But other than that, like indicators for these kind of strategies are just, I would kind of go as far as to say that they're pretty useless altogether. The same really just for like the regular price action. I'll talk about why that is. So really, I think a setup for Digitex is going to look something like this. So it looks like they're going to lay the platform out this way. They're going to have the ladder on the right or the left or whatever. They're going to have a space for a chart, and then they're going to have an indicator space at the bottom with like volumes. We got volume here, but I'm really just going to be hoping they have the volume here like this. And so all of the trading and real-time stuff goes on over here. This is really just a snapshot, so we know what the big picture is. That's all. So let's talk about how I think it's going to be best to use the Digitex platform, and specifically the ladder. Obviously, it's not out yet. The the test net is coming out pretty shortly in as I'm recording this. So we don't actually know what they're going to have in terms of functionality for the ladder. We can only guess based on the screenshots and the demos that they've given. And I'll take some of these columns off here in a second because we're not going to have some of these columns. But based on what it looks like, the Digitex ladder is going to be, how it's going to be laid out and the functionality. Really, as Adam has said, it's all about like very short-term stuff. So it's really going to be beneficial for people that are just making a lot of trades, kind of getting in and out, trying to either grab a few ticks, 5 ticks, 10 ticks, or in some cases like less, like 1 or 2 ticks, and getting in and out of trades at the same price without losing commissions and things like that. So you're going to be able to do like swing trading and longer term strategies and things like that, but the real benefit is going to come from super short term stuff, and that's all going to be done on the ladder. So really, if you're trading, if you're doing like real scalping and you're getting in and out, and the kind of thing that Adam is trying to promote on this platform, and the kind of traders that he's trying to attract, indicators are not really going to be much use to you. You might be able to make them work, but you're not going to be sat around waiting for the 10 EMA to cross the 20 EMA or whatever it is. Like, you're not going to be looking at the RSI. By the time that has turned around, the thing that caused it to turn around is basically over. And I'm talking short-term strategies here. So, people make that work. Swing trading and things like that, that's fine. But to take advantage of the zero fee and really get the most out of the zero fee and the way the market maker bots are being built, we want to be trading really, really actively for like really short-term moves. And you're not going to be looking at indicators to do that. If you are, I personally think that you're going to be selling yourself short, no pun intended. And even with the just looking at price, so you're not going to be sat around waiting for a 5-minute candle to close either and saying, oh, this is the wick, this is where it opened, this is where it closed. Like, again, when you're doing super short-term stuff and you're trying to catch these little momentum moves and things like that, the candles are not going to be very helpful. And if you're going to go down to like a 1-minute chart or even lower, then it's going to be so noisy and so hard to read that you're going to end up having a lot of trouble, at least for most people. So the ladder is really where you want to be. So basically, I just want to talk about what I think are going to be some good strategies for using the price ladder based on how I think Digitex are going to set it up, and what we know about the zero fee model, and about how the bots are going to work and things like that, the market makers. So let me just remove some of these columns actually, because we want to have a pretty good idea of how I think they're going to set it up. I think it's going to be something like this. So this is the columns that I think we're going to have. And these are the columns, I believe, that are in the on the screenshot on the homepage, and basically in the demo that Adam shared. So basically what you have is the current price. You have the resting orders at different prices. So these are the sell orders here. These are the buy orders here. And then I'm really hoping that you're going to have this volume profile on the left-hand side, because this is going to be really helpful. I think they're going to have that. If we're extra lucky, there will also be some columns showing the trades going through in real time at certain price levels. So like if someone basically hits like 15 contracts into this, there'll be another column like showing that. That was one of the columns that I just closed. I don't think we're going to have that, but if we are, that's going to be really good. So let's just talk a little bit about the strategies. So really, one of the main things that you're going to be doing when you're using a price ladder, and something that I do a lot. So this, by the way, what we're looking at, this is the ES. This is the E-mini S&P, which I don't really do much with anymore, but I assume if they're going to add, things outside of crypto, if they're going to add like stock indexes and things like that, I assume that will be the first one that they add. It might not be, but this is what this is. So what we're going to do is, the first thing we're going to be looking for is like short momentum moves. Okay, so if we're trying to catch like a couple of ticks, like maybe 3 to 5 ticks, or the bigger moves up to 5 to 10 ticks or whatever, the ladder is really great for feeling the momentum of a move, and really kind of getting in touch with like the pulse of the market. And a lot of it is going to be done on feel. Okay, so if you're trying to catch like a 5 tick move or something, you're not going to do that over here on the price chart. You're not going to be doing it by like waiting for a certain indicator to like buzz at you or whatever. You're going to be anticipating the move based on what is going on over here, and a lot of that is going to be momentum. Okay, so what do I mean by momentum? So momentum, really, it's not necessarily like quick price moves. Like, it's not the price like shooting up or shooting down. It's exactly what it says. It is momentum. So it's just consistent movement in a certain direction. So this market is completely dead right now. It's super late. So nothing's happening here. So this is actually a live market, but just basically nothing's happening because it's really, really late. So in terms of momentum, if we were to go, we see these 32 contracts get hit, and then it takes up, and then we see, we see this 51 starting to go down like pretty quickly. It gets cleared and gets ticked up, and then again people start hitting this, whatever that number was. It was 53, and then 58, and basically you just want to see consistent movement in one direction. And like I said, I don't mean fast. A lot of the time, a kind of more grinding move that's consistent is a really good momentum move to get on. And we might be, if we're, say we trade up, we hit this 44 clears, and then we start hitting in, this was 51. So we start hitting into this 51, and we're seeing it go down like to 40 to 30 to like 25, and then we might see, okay, we think this number is going to go, the momentum looks strong, we're going to try and get in, take those last few contracts, tick up, and then we're in a profit. And we want to be looking for the momentum to keep going in our direction. Okay, and to say again, we're not necessarily looking for these like really violent jumps up, because we need like support to come in behind. And I don't mean support and resistance or any of that. I just mean like people loading up on orders behind us on the buy side to support the price move up. So momentum is a really good one. I think that with the zero fee model, and the fact that you're going to be able to scratch a lot of trades, so you're going to be able to just get in and out, and like buy and sell at the same price without paying a commission, you're going to be able to take a lot of shots at momentum. And really, if the momentum that you feel is there doesn't show itself immediately, you can just get out and wait for the next opportunity, and basically just take a free shot at catching a little move. So that's something that I'm going to be quite excited about doing. That's not something that you can really do as much in traditional markets where you have to pay commissions, like especially in crypto. Like you can't look for these tiny little moves and try and get these little momentum bursts, because if you keep scratching your trades, then you're just gonna lose money on commissions. And the same in the regular futures markets as well. So I think momentum is going to be a really big one. That's definitely going to be what I think is going to be the best place to start for someone who has not used a ladder before, and just wants to have a high kind of probability low risk strategy. So if you came and the market was looking like this, and say this was Bitcoin or whatever, like you're not doing anything. You're not going to get in. Because there's no movement in the market. You want to be trading at active times. You want to be looking for the momentum, and then once you feel that you are in touch with it, and this is just something that's going to come with practice and watching the screen for a lot of time, you're going to be able to anticipate these little moves. You'll know, like, this price is moving up, and you'll be like, I know this 30 is going. They start hitting into 53. I know this is going, and you can jump in, you can ride it up, and then you can get out. Or if you feel like it's going to turn into a bigger move, you can move up, move your stop to break even, and things like that. So momentum is going to be a really good one that I'm going to be looking for sure. So that's definitely what I would say is going to be a good starting point. Another thing that you can do is kind of related to momentum and catching these little spurts is these price ladders are pretty good for trading little pullbacks. So one thing, if you're doing, again, really short-term stuff, if you're just looking at a price chart, then the small little pullbacks on a price chart, they can all happen within a 5-minute candle, and by the time the candle's closed, the pullback is gone. It's gone down. It's made a tail. It's all the way gone back up, and then you have a nice big green candle, and then the candle closes, and you're like, okay, well, here's my entry point. But by that point, you've missed the pullback, and it's already running ahead, and it might already be running out of steam if you're doing really short-term stuff. So again, what you're going to be able to do on the ladder is, if you have a little pullback, say, we take out this one, we take out this 40, this 47, this 57, this 59, not that quickly, but we take those out with good solid momentum. We're not like taking back too much. At some point, we're going to pause, and depending on the situation, you might just close your trade there. But in other situations, you might be thinking, okay, this feels like part of a bigger move, or you could already be in like a solid uptrend for the day, and you think that this is probably just a breather, and I am actually going to hang around and either add more or try and get in. So if it goes up like I just described and you haven't got in, what you want to be doing is look for a little pullback where there's two different situations where you can kind of get in on a pullback with a ladder. Or two main ones. My favorite one is just going to be like lack of participation on the downside. So, it moves up like 5 ticks or whatever, and then, it might start ticking back. And what you're really looking for is, when the price does start to come back, you're looking for like just very little selling pressure on the downside. So you don't want to see, so by then we'll be like up here, and like these buy orders will be up here. You don't want to see them like being taken out aggressively and quickly and with force on the downside. You kind of want to just see it like falling back slowly without any kind of venom or anything like that, and just like no real interest from sellers in actually pushing this back down. And what that is, it's just it's buyers like either taking a breather, or like some really short-term guys just taking some profit. Or in some cases, if it moves up like fairly quickly, sometimes there isn't enough time for the buy orders to move up, and you kind of get a little bit of a vacuum, and there might not be any like buying support up at this level, so it will like drift back a little bit, but there's not anyone hitting into it hard. And then That's the sort of thing where you're thinking, okay, it's drifting down slowly. And when you start to see the buyers coming in again and they start taking out these higher levels with the same kind of forces before, you can be like, okay, there was my like very tame pullback and now I can get in. And that's the kind of thing like you see this on the ladder, but you don't see it over here. Like I said, that can happen all within like a 5-minute candle. And if you're looking for the candle close, by the time it's happened, like it's gone and you've missed it. And you don't know what makes up the candle. You don't know like what is going on at the individual price levels in the candle. You don't really know the volume. I mean, you can look down here, but I mean, this doesn't really tell you much in comparison. And you don't really see the speed at which the prices are being moved between and things like that. And it just comes down to like getting the feel, so like being in touch with like the pulse of it, and that's very like hard to quantify, and sounds a bit kind of woolly. But once you start like watching a market and like looking at the ladder every day, then you will start to develop that feel of, okay, this is what's happening, and you'll just intuitively kind of pick these things up. So it's not like we're going to be trading on rigid rules or anything like that. Okay, what's another one? So I mentioned these volume profile. This is called volume profile here, which is basically just a number of contracts that are traded in each price during this session or just whenever you reset it, basically. So I don't know what the settings are for Digitex. I assume it's going to be like the last 24 hours or the current session. But as it's like Bitcoin, then there's not really going to be like, a European session and US session and things like that. So I assume they're just going to keep like the last 24-hour volume or something. So one thing that we want to be looking at is basically how like the price reacts when it comes back to a level that previously traded good volume. So this, obviously there's very little volume here because we are we're outside of market hours, and I've only had this running for like, I don't know, like the last hour or something, maybe like a couple of hours just to get some information before I made this recording. But again, the market's been closed for that whole time. So really what we would be looking at here, if we assume this was just like a regular, market data, we might be, say we're in this range, right? This is a range. We've been trading in this range from, let's say from 29.80.50 to 81.75. Like this is our range where most of the volume is. Now, if we think there's going to be a break to the upside, like maybe we are biased to the upside for whatever reason, and we think this is just like a consolidation, then we're going to carry on moving up. One thing you can look at, some people will trade the breakout or whatever, and you can get caught out with that. But what I like to do is, if we are gonna break out of this range and then continue up, I would expect us to break out of this area of volume. So we would go up, we take out these orders, and then we would pulse, and I'd be looking for us to come back to this area, like the top of this volume area here, and I'd expect like a reaction here, which would essentially be like this price level, or maybe this one just like stopping the action. So it's like a pullback, like bounce like that. So we would come up, we would come out of this area, we would come back down here, and then we would carry on moving up. And again, how do we identify that? Well, you either look, it comes up, it comes down. You either look for very little participation on the downside, or you look for when it gets back to this area, you're looking for like aggressive buying. They're coming in again, they're hitting 68, they're hitting 63, they're hitting 121, and you just pick up that momentum again. And that's another good one. And it will depend how they actually display the volume profile of how easy that is going to be able to do. There are, if you're really paying attention, you can actually track some of these things in your head and see, okay, I know like from the last half an hour, there have been like a whole bunch of volume in this range. Maybe I can't like necessarily see it, but I know it's been there, and I'm just going to wait and see what happens. Is it going to come out and bounce and something like that? So that's another one. Another simple one is going to be trapped traders is a good one. So basically you're looking for, traders kind of getting stuck at a particular level where you've seen high volume. So like maybe you have like a high number of sellers or buyers trying to, they're hitting the market at a certain price level, and it's not moving, they're not getting anything for it, and then the market starts to go the other way, and you're thinking, okay, these guys are trapped. At some point their stops are gonna get hit, and when they do, the market's really gonna jolt. Okay, so maybe for example, if we just stay with where we are, maybe we're in this range, and the price is moving up to the top of the range, and people are playing the range, let's say, and we've got sellers. So we've got people trying to sell the top of this range. They think this is going to go down. They think we're just going to keep bouncing around. So you might see a lot of volume trading, kind of at this price, and identify that people are trying to sell, expecting it to go down. Well, if you see a lot of volume trading and there's no down movement, maybe it goes up to it goes up to 82 to 25, and then it starts taking out these numbers. Well, there's some point that the sellers are going to have to say, okay, I was wrong here, and I'm now going to close this trade because I'm 4 or 5 ticks loss or whatever, and it looks like this market's going to go the opposite way. So there's going to be a point where they're all going to say, okay, I'm getting out, and when that happens, that's going to add to momentum on the upside. So what we would say is that these people are trapped. Like, they were trying to short here at the top of this range, it didn't work. They're all like getting nervous. They're like, okay, I don't think this is going to turn around. So they're stuck, they're trapped, whatever you want to call it. At some point they have to stop out, and when they do, that's going to give you some momentum. So that's another one that I like to look for. It's actually easier if we had a few more columns to do that, which are on this platform. I'm not going to be sure if they're on the Digitex platform, but again, it should be possible to like pick up those kind of things, especially if we have like some really good volume information as well. So this is basically just a few kind of things that I like to look for. In terms of the actual strategies that you'll use for trading any particular instrument is going to change a lot. So I think when Digitex launches, it's just going to have Bitcoin, the Bitcoin price initially, and I don't really know how that market is going to behave on Digitex. It might be extremely liquid. It might be really, really liquid, which means that it's not going to be as volatile as it could be. The price movements won't be so quick and so sudden and so big. The more liquidity there is in a market, the less volatile it is. Or it could be maybe the liquidity is going to be lower, so it might be closer to like oil or something, where the liquidity is low. You don't have many contracts on each side, so something kind of like these numbers here, and in that case it's going to bounce around all over the place, and it's going to be up down, and then you're going to be on a little roller coaster basically. So that's like the less liquid scenario. And then if it was really liquid, it would be like, I guess if you've ever traded like the treasuries over in the US, like the interest rates, like the 10-year bonds and all that stuff. I haven't looked at those for a while, but they are traditionally very, very liquid, which means you have like thousands of contracts on each side, thousands of contracts on the sell side, thousands of contracts on the buy side, which means that it takes a long time to go through 3,000 contracts. So it might tick up, it's going to stay there for a while, might go back down, tick up, but it's not going to be flying around like oil is or something like that. I know Bitcoin's very volatile, but it will be the only market. There'll be a lot of people in there, there'll be a ton of liquidity. So maybe it'll be really smooth, maybe it'll be all over the place. I have no idea. And that will change like for the first few months as well, as more people come on and things like that. So those are some thoughts on the price ladder. And once again, I would say, like, if you're not familiar with using a price ladder, definitely take the time to make them to learn it and like learn how it works and like learn some strategies on it, because Digitex is built for people using this ladder basically. Um, any firm that trades, any firm that's trading like high volume, short term scalping, like in the futures markets. So like the proprietary trading firms, the people that are doing like, hundreds and thousands of contracts, they're putting in the big volume on the futures markets, like outside of crypto. They are, if they're doing short term stuff, they're looking at this. They are not sat there waiting for the EMA to cross this and then waiting for like this Fibonacci level to be hit and things like that. By the time all that's happened, like the opportunity is gone. If you're doing like longer term swing trading, then fine, whatever. But all that stuff, like even like the pivot points and Elliott wave and all that stuff, it's just, if you're doing short term, like that's not what you want to be looking at. You want to learn to use this ladder. And yeah, that is how I would sum it up. I will try and make some more detailed explanations of like some of the strategies and some of the things that you can do with a ladder and things like that, and maybe try and be a bit more descriptive. But like I said, at this point, I don't really know how the platform is going to work. I don't know how what the price is going to behave like. Obviously, the zero fee thing makes all these different strategies viable that are not viable elsewhere. So we really don't know how it's going to behave. But if it behaves like you think it's going to behave, then what I've summarized in this video is where you want to be, and starting with momentum and really try and pick up the pulse of the market, get a feel for when it's going to go, when it's not going to go. I remember the other thing I just wanted to say. The other thing that you want to be looking at for the short-term stuff is correlated markets. All right. So what that means is markets that move, not all the time, but some of the time, or more often than not, in tandem. Okay. So let's say, so this is the S&P. So if we were trading this, we would definitely get rid of this. We would shrink this down. We would have another ladder here. We would have the NASDAQ. We would maybe have like the Dow Jones or something like that, because all those markets tend to move together. Like if one moves and the other two don't move, the move is not lasting, like for sure. If one moves and then the other two start to move and they're kind of in tandem, you can be pretty confident that that move has something behind it. Okay. Now, like the same may or may not be true when you're doing this really short-term stuff with the ladder in crypto. So when Digitex has more contracts, so they have like, say you can do Ethereum, say you can do Litecoin, Bitcoin, things like that. You might say, okay, well, Bitcoin is going to be the leader, and you might watch it for a couple of weeks and say, okay, I can see that not all the time, but a good amount of time, a decent amount of time, when Bitcoin moves, it's going to bring Ethereum with it, like in the short term. I'm talking minutes, okay? So you might think that that is something that's going to happen more often than not. So if you're only trading one, but you want to keep both here, so you might have Ethereum here on the left, you have Bitcoin here on the right. You think Bitcoin's the leader. Bitcoin starts to go. You see some volumes, you see some momentum, and you think, okay, there's a better chance now that Ethereum's going to go. I'm going to enter, and as long as the momentum looks strong on Bitcoin, I'm going to like use the Ethereum ladder, and I'm going to go, and I'm going to take it. Things like that can work really, really well too. So I think that sums up everything that I kind of wanted to say. I would, put some time into like learning even just what this ladder is, how it works and things like that. And if you can master this with zero fees, like I think it's going to be really, really great. So that is it for now. Kind of rambled for quite a while, so I'm going to stop that. And I'll try and do some more specific kind of like strategy and theory videos of what I think is going to work a little bit later on.